Ever closed a trade too early, only to watch it fly in your direction right after? Or frozen fear, missing a perfect setup because your last trade was a loss? Fear in trading is the silent killer of consistency, and it's costing you profits every day. In this video, you'll learn how to stop trading like a scared beginner. Start thinking like a calm, professional trader. These frustrations are incredibly common among traders. They feel stuck in a loop, constantly battling their own minds. The core problem isn't usually the strategy itself. It's something far more insidious. It's fear. Fear is the silent killer of consistent profits in trading. It creeps into your decisions, sabotaging even the best analysis. Welcome to Online Trading Hub. Our goal here is to help you navigate the complex world of trading. And today, we're tackling one of the biggest hurdles: fear in trading. We're going to work on rebuilding your confidence and reshaping your trading strategy from the inside out. You've probably heard that little voice in your head, the one that says, "I should have stayed in that trade," or "I'm too afraid to take this next trade after that loss." That internal dialogue is fear talking. This video is designed to help you break free from that fear-based trading loop. We're going to dive deep into trading psychology, understand exactly why fear sabotages your efforts, and learn how to reprogram your mindset around risk. Get ready to transform your trading. So, what does fear actually look like when you're sitting in front of your charts? It shows up in very concrete, damaging ways. You might find yourself exiting trades prematurely, even when your original plan indicated a much larger profit target. The setup was valid, the price is moving in your favor, but a small gain feels safer than the potential for a larger one. Another common sign is tightening your stop loss unnecessarily. You move it closer to your entry point just to be safe, only to get stopped out on a minor price fluctuation before the trade continues in your intended direction. Hesitating to enter trades is a huge one. You see a perfect setup according to your rules, but you pause, second guess, and miss the entry entirely. Skipping great setups after a losing trade is pure fear in action. One loss makes you gun-shy, causing you to avoid the next opportunity, which might have been a winner. Ultimately, fear leads you to deviate from your carefully crafted trading plan. You abandon your rules in the heat of the moment, driven by emotion rather than logic. Fear's primary objective is safety, not performance. It prioritizes avoiding pain over achieving potential gains. This leads to a pattern of taking small, insignificant profits while simultaneously incurring small but frequent losses. The result? Your account struggles to grow and your confidence takes a nosedive. You're stuck in a cycle where fear dictates your actions, preventing you from ever seeing the full potential of your strategy. This brings us to the vicious loop that fear creates in trading. It often starts with a losing trade. A loss, especially an unexpected one, can trigger panic or anxiety. This emotional response carries over to the next trading opportunity. Instead of calmly assessing the new setup, you hesitate or feel compelled to exit any potential trade almost immediately if it shows even a tiny profit. This leads to either missing out on profitable trades entirely or securing only tiny wins that don't offset your losses. The lack of positive results further decreases your confidence in your strategy and yourself. With lower confidence, you might start trading smaller position sizes or, worse, skipping valid setups altogether. This perpetuates the cycle of underperformance. You're not giving your edge a chance to play out over a series of trades. In extreme cases, this cycle can lead to quitting trading altogether, feeling like it's impossible. Or conversely, it can lead to overreacting, taking impulsive, high-risk trades out of desperation. This entire process is a form of psychological conditioning. You're training your brain to trade primarily to avoid the pain of losing, rather than to execute your strategy for profit. This is a critical distinction. Trading to avoid pain is reactive and emotional. Trading to execute a strategy is proactive and disciplined. Professional traders operate from the latter mindset, not the former. They understand that this fear cycle is a trap and actively work to avoid it. So, why do so many traders fall into this trap and trade with fear? One of the deepest root causes is attaching your self-worth to your trading results. When you do this, every winning trade feels like a personal validation, a sign that you are competent and successful. Conversely, every losing trade feels like a personal failure, proof that you are not good enough. This creates immense emotional pressure on every single trade. The outcome of one trade feels like a judgment on your character and ability. This pressure fuels specific fears that cripple your decision-making. The most obvious is the fear of losing money. This is natural, but when tied to self-worth, it becomes paralyzing. Then there's the fear of being wrong. Nobody likes to be wrong, but in trading, being wrong feels like a direct hit to your ego when your identity is on the line. Finally, there's the fear of disappointing oneself. You have goals, expectations, and when trading results don't meet them, it feels like a personal letdown. The truth is, a single trade does not define you as a trader or as a person. It is simply one event in a long series of probabilistic outcomes. Trading is fundamentally about probabilities, not about achieving perfection on every single trade. Expecting yourself to be right all the time, or even most of the time on individual trades, sets you up for inevitable disappointment and, consequently, fear. You must separate the outcome of one trade from your identity and focus on the process. How do professional traders navigate the inherent uncertainty and risk of the markets without being crippled by fear? They operate from a fundamentally different mindset. They have key principles for overcoming fear that are ingrained in their approach. Principle number 1, expect losses as normal. Professional traders understand that losing trades are not exceptions. They are a built-in, unavoidable part of the trading process. Even highly profitable strategies have losing periods and individual losing trades. A strategy with a 50% win rate means you'll lose half the time. A strategy with a 30% win rate means you'll lose 70% of the time, but the winners are large enough to compensate. Pros don't fear losses. They plan for them. They know losses are just the cost of doing business in the market. Principle number 2, trust your proven edge. Once a professional trader has developed and tested a strategy that shows a statistical edge over time, they trust it implicitly. They follow the strategy without letting emotions dictate their actions. Their focus is on executing the plan correctly, trade after trade. Principle number 3, focus on the next 100 trades. This is a powerful perspective shift. Professional traders understand that the outcome of any single trade is largely insignificant in the grand scheme of their trading career. Their focus is on how their strategy performs over a large sample size, like the next 100 or 1,000 trades. Beginners tend to zoom in, obsessing over every tick of the current trade. Pros zoom out, understanding that consistency comes from executing their edge repeatedly. Principle number 4, separate identity from outcome. This is perhaps the most crucial principle. Professional traders do not view a losing trade as a reflection of their personal worth or skill. It simply means that, in this particular instance, the probabilistic setup did not play out in their favor. They understand that their value as a trader comes from their discipline, their process, and their ability to manage risk over time, not from being right on every single trade. Adopting these principles helps build emotional control and genuine trading confidence. Confidence comes not from winning every trade, but from trusting your process and knowing you can handle the inevitable losses. Okay, so how do you actually implement this professional mindset and beat fear in your day-to-day trading? Here are 5 practical strategies you can start using immediately. First, use a pre-planned trade checklist. Before you even consider entering a trade, have a written list of the exact conditions that must be met according to your strategy. Go through this checklist for every potential trade. This removes hesitation and forces you to trade based on objective criteria, not fleeting emotions. Only entering trades that meet your criteria builds trust in your process over time. Second, automate your stop loss and take profit orders. Once you enter a trade, immediately place your stop loss and take profit orders according to your plan. Then, step away. This eliminates the opportunity for emotional interference while the trade is active. You let the strategy play out without constantly monitoring and second-guessing. Third, scale down your risk temporarily. If you're struggling with fear after a series of losses or just feeling overwhelmed, reduce your position size significantly. Trading with smaller amounts of capital reduces the pressure on each individual trade. This helps keep your brain calmer and allows you to focus on executing your strategy correctly without the intense fear of a large loss. Fourth, review winning trades that you exited too early. Go back through your trading journal and specifically analyze trades where you took profit prematurely out of fear. Study the charts and your thought process at the time. Identify the triggers for your fear and notice any patterns that lead to these early exits. Understanding when and why you get scared is the first step to changing it. Fifth, shift your focus from outcome to execution. Stop rewarding yourself mentally only when you make money. Instead, reward yourself for following your trading plan perfectly, regardless of the outcome of that specific trade. Did you identify the setup correctly? Did you enter at the right point? Did you set your stop loss and take profit according to your rules? Did you avoid emotional interference? Rewire your brain to value discipline and process adherence over the immediate profit or loss of a single trade. This builds a foundation of consistent behavior, which is what leads to long-term profitability. Remember, fear in trading is not a permanent state. It's a mindset, and mindsets can be rewired. Fear is a liar that tells you to play small, to avoid risk, and to stay stuck in underperformance. It keeps you from achieving your potential as a trader. The good news is you have the power to change this. You can choose to trade with courage and discipline instead of fear. It starts with acknowledging the fear, understanding its roots, and implementing practical strategies to counteract it. So, here is your call to action. Start today. Make a commitment to yourself to follow your plan on the next trade. Trust your edge, the statistical advantage your strategy provides over time. Embrace risk, not recklessly but intelligently, as a necessary component of trading. Trade like a pro, not like someone terrified of losing. If this video resonated with you and you're ready to take control of your trading psychology, please like this video. Subscribe to Online Trading Hub for more insights and strategies to help you succeed. And in the comments below, write this commitment. I will trade with courage and discipline. Let's silence the fear and start trading like the professionals we aspire to be.